All right. Looks like it's my turn. Good morning, everyone. My
Hello.
name is Louis Rios, and I'm really excited to talk to you today. Um, I'm slotted for an hour. I probably won't be taking up the whole hour, and so I don't think anyone will have a problem with that. But I did want to introduce myself. I'm going to start my slides. I have a little introductory slide about myself and about my organization, and I guess I'm ready just to jump in if you guys are ready. So let me share my screen. Okay. All right. So I got this. I'm going to keep the chat out. Let me minimize this. Just hang with me for a second. Okay. All right. There we go. Cool. Awesome. So real quick. So I'm with Le Ho'olaha. We are a Native community development financial institution. And simply put, we do small business lending for the Native Hawaiian community. And during the presentation, if you guys have questions, I will take questions, but I'll let you know if the question's better to talk about at the end of the presentation. I'll let you know. If it seems like I can fit it in during the presentation, I'll take your question and then we'll talk about it just during. But feel free to use the chat function. I have my chat open, so you can say things or say that you have a question there. But yeah, so I'm excited to be with you guys today. Cool. All right. So my name is Louis Rios III, and I am a certified Native CDFI practitioner. I am Native American myself. I'm Ojibwe from the Bois Forte Band of Chippewa in Minnesota. And I was a small business owner. I have little side things right now, but small business, I love small business. I participated in small business from 2015 to current. And so that's kind of how I found my way into this field of small business lending, because it became a passion of mine early on. I think some people's microphones are on. Is there a way to mute background noises and stuff?
Thanks for that mention, Louis. If everyone would be so kind as to mute your microphone so we don't hear the reverb in the background. Thank you very much.
Cool. All right, almost there. Awesome. Okay, thanks, guys. Sorry, I was getting a little distracted and I was like kind of spacing out for a sec. But all right. Okay. So yeah. So that's a little bit about myself. I'm here in Hawaii. I live on Big Island with my wife. She's from Waimea, and we live here in her hometown. And her family has been on Kohala Mountain for generations and generations, as far back as we can see through the Keawe line. So it's kind of fun being with my wife as another native, because I come from a mainland native perspective, and we kind of have funny conversations. We usually say like, man, if anyone understands the Native Hawaiians, it's the Native Americans, and if anyone understands the Native Americans, it's the Native Hawaiians. We have very similar backgrounds in our history as far as the trials and the things we've been through as a people. Okay. All right, so part one, I'm going to break today into a couple parts. It's going to be 4 parts. And I think we can send the slides to you later on. So if you miss something, you will have access to the slides, I'm pretty sure. But also I can go over things as we talk too. But part 1, why CDFIs are Hawaii's best kept secret for capital access. All right. So before I explain that, a lot of people ask me, what is a CDFI? And there's a simple answer, and the simple answer is we're just a nonprofit that does loans. In other words, we have a loan fund or a pool of money that we're able to loan out to people. But there's a little bit more to what a CDFI is, and I think what makes us different is also what makes us advantageous for the Native Hawaiian community. So first up, the CD in CDFI stands for Community Development. Overall, what we do as a CDFI is we're trying to develop the community. And the community is whatever our target market is or wherever our target community is. And so for me personally, as a native CDFI, my target community is the Native Hawaiian community. And so my goal is to develop that community. And secondly, the FI stands for financial institution. And in layman's terms, that basically just means an institution that handles money or finances. So banks are a financial institution, credit unions are financial institutions, and CDFIs are the same way. And so part of a community development is we want to empower disadvantaged communities. So CDFIs are always focusing on specific communities that are disadvantaged. On the mainland, since the Native Hawaiian community is a lot smaller over there, usually what mainland CDFIs are focusing on are the Black and Latino communities, rural communities, so communities far away from infrastructure that need some development over there. There's also native CDFIs on the mainland. So there's CDFIs that deal with Indian country. So my tribe has a CDFI they work with. There's native CDFIs all over the country. And so that's the disadvantaged communities that we focus on. And so another part of our community development is we give knowledge and guidance. And the last part is we want to make changes that last. And so those three things, those are our goals. And so the way we reach our goals, or the way we strive to execute our goals, is we do it through the financial institution as our tool. And so we provide affordable loan opportunities. The way I structured the slides is empower disadvantaged communities. We do that by providing affordable loan opportunities. We give knowledge and guidance by one-on-one financial education about the loan process. And then we try to make changes that last because we grow the fund and lend more money to the community. So part of my job is to access grants and access capital for you guys. I try to build our loan fund so you guys can borrow. If I can lend out more money, that means there's more opportunity and more development in the community that we're trying to aim for. So if there's any questions there, let me know. You can put them in the chat, but I'll keep going unless anyone stops me. Okay. All right, here's a couple stats. You don't need to memorize these or anything. This is just, a lot of people ask me, they go, why haven't I heard of a CDFI? What the heck is that? And to be frank, we're not as, we don't have as many CDFIs as we have banks and we have credit unions in the country. But we're a growing industry, and on the mainland, the CDFI industry is booming. So we've been around since 1973. There's more than 1,300 CDFIs. $222 billion went through the CDFIs a couple of years ago. This is all 2020 information. And if you notice in the bottom left, this is kind of the one I want to focus on right here, is 84% of who we lend to are low income. Then 60% of the people we impact are people of color. 50% are women and 27% are rural. And so looking at those statistics, CDFI work here in Hawaii totally hits all those boxes, especially for people not on Oahu. We've got Big Island, low income, people of color, and there's women-owned businesses. So it fits the bill. CDFIs are a great tool that we're trying to grow here in Hawaii. And this is just a summary of the year. So community facilities, 535,000 businesses and micro enterprises got help or loans from a CDFI, which that's a huge number. And 2.19 million jobs are created or maintained through the funds of the CDFI, through the CDFI industry, and a lot of homes. And I'll go over the homes part a little bit later. Okay, so specifically the CDFI fund here in Hawaii is still growing. I hate to say it, and it's not a bad thing, but we're a little behind the mainland as far as our CDFI industry here in Hawaii, which I don't think will be surprising to anybody. But here's a little bit about our CDFIs here. Compared to CDFIs on the mainland, CDFIs in Hawaii are small. And what I mean by small is our loan funds, the amount of money we have to lend out, is pretty small. Some of them a couple 100,000, maybe 1 million, while on the mainland, CDFIs have hundreds of millions, and some of them even have 1 billion. And so obviously we have a lot of ground to make up there. We're just trying to get more money to get it to you guys and to get to the businesses here. There are less than 10 CDFIs in all of Hawaii and only 4 native focused CDFIs. Yeah, we definitely want to up that number, of course. And there are only 3 small business focused CDFIs here in Hawaii. It's myself, Leho Olaha, here in Big Island. A lot of you have probably heard of CNHA, the Council for Native Hawaiian Advancement. They do a lot of things. They have a lot of programs, and one of them is a CDFI program. So they're technically a CDFI as well, and they do small business loans over there as part of what they do. And then, sorry, I'm like blocking this. There you go. Only 2 CDFIs in Hawaii are not on Oahu. And so, yeah, that's another thing we're trying to change. The only other, besides Big Island, Kauai is the one that has a CDFI. So we don't have any on Maui. We don't have any on the other islands. It's just these 3 islands, which we're trying to change that, of course. But luckily for everyone, a CDFI, they can work with clients from any island. There's no, like, I can only work with Big Island. I have clients from Molokai, from Oahu, everywhere. So that doesn't matter, actually. And then, fun fact, CDFIs can specialize in any type of lending, like consumer loans and home loans, auto loans, small business loans, etc. So that's one of the things about a CDFI is we specialize in things. So me specifically, I'm the small business CDFI. So that's what I do. Cool. I don't see anything in the chat, so I'll just keep going. Okay, so you guys are probably wondering, how does a CDFI differ from a bank? So what's the point of even talking to a CDFI versus talking to a bank or a credit union? We typically do lower interest rates, which I know all the small business owners here, that's what they're going to be interested is like, oh, we can actually have more affordable capital. So lower interest rates, that's a big one. Higher chances for approval. So yeah, that's a big one too. The access of the capital, accessing it, there's a better chances with someone like me. A credit score is not a major factor for approval, and most don't even ask for it. And for the Native Hawaiian community, on average, credit scores are just lower. And that's something we're trying to change, or well, everyone's trying to change. And so we try to help in that gap of the market. Some people have great businesses, but they don't have good credit. And that's just part of it. And so we try to help people with that. We don't try to up their credit score. We just don't use it as part of our loan decision process as heavily as a bank would. So I know that probably perked a lot of people's ears. They probably know someone that has a great business, but maybe doesn't have the best credit. Mission-driven lending, not profit-driven lending. So yeah, that's a huge one. We are not profit-driven, and so we're nonprofit, right? And so banks charge higher interest to make higher profit. Credit unions, even though they can be not for profit a lot of the times, technically they still have to worry about profit more so than a CDFI does. And the reason why that is like that is because my operating costs, meaning my salary, travel, everything, is typically paid for by government funding or grants. And this gives me or us the time to help and serve the community. And so that's a big one. Like, I actually have part of my salary gives me time to actually work with people and to do things one-on-one. If you remember that first slide, we do one-on-one financial guidance through the loan process. And so I can hold people's hand, and I have the time to do so, where people at a bank, they don't have the time to do that. It's either you have everything ready and you're ready to go, or they're not going to talk to you a lot of times. And so we try to make up the gap and walk people through and give them that education that they need. And I'm very thankful that our US Treasury has a CDFI fund that they allocate funds to every year to supplement all the operating costs that we have. And then grants, of course, I can apply for grants all over the country. Cool, I see some questions. Oh, someone already answered it. That's cool. What are the minimum and or max lending amounts? Good question. That varies completely. A lot of times CDFIs, they can go really low. And a lot of times the max, I mean, I know CDFIs that have done $500,000 loans. I know CDFIs and even myself, we've done $5,000 loans. It kind of depends on what you're looking for, the need, and if it makes sense. Most of the time though, for us here in Hawaii, we're limited by the amount of money we actually have in our loan fund. So if you remember, we don't have, millions and millions of dollars, a lot of us, to loan out. And so sometimes we're constrained about what we even have available. But that's a good question. I will say though, actually on that, I will say on the minimum and maximum loan lending amounts, I have partnered with other CDFIs to reach a number that I couldn't hit by myself. And so we do participation loans. So if someone needs to pitch in 100 grand and 100 grand to reach a 200 grand, we do that too. So a big amount isn't an automatic no. We can actually work together. So I wouldn't be scared to ask for something big if it makes sense. Yeah, is this someone saying something, or was that feedback?
How was the AC?
So the AC for your truck. I was taking a look at it. I noticed the fan on the engine is what cools the condenser down. So I noticed that wasn't running properly. It's still good. It's not going to overheat your truck or anything.
Oh, okay. I think Marla or someone else, do you guys mind pushing the mute all button? Or if you guys can hear me, please mute if you're not asking a question.
Yeah.
Yeah.
So I'll go ahead. My dad got a parts truck like this, so I'll go ahead and look and get the fan.
Okay.
Yeah,
Thanks.
my dad has parts truck for that. That's
Does he have any seats?
seats. What kind of seats?
Sorry guys, I'm trying to see if I have. Okay, I think we're good now. Thank you, whoever fixed that. Thank you guys.
Sorry about that. Thank you.
Great. Okay, another question. When opening a new business as a first-time startup, is there something that we can consider to obtain? Is there something we can consider to obtain funding? Yeah, actually, I'm going to go over that too when it comes to startups. And can you explain what type of credit scoring requirements do you work with the members achieve for approval? Yeah, I'm also going to cover that in a couple slides too. So that's good. I'm glad everyone's on track and on the same page. Okay, so part two, what being bankable means and why that's important. This is something I really like to paint the picture for people, especially for small businesses or growing businesses. So bankable is when a person or business can borrow from a bank. I know it sounds a little simple, but we'll talk about what that actually means and the implications of that for you. So how do banks decide who is bankable? 3 C's. You guys might have heard of 3 C's, right? First one's cash flow, meaning simply put, cash flow can be very complicated, but simply it's activities being cashed through the door. Banks look at that. Banks look at collateral. So if there's a plan B or a plan C to pay loans back, something of value that can cover the cost of the loan if things go south. And credit. And credit isn't always credit score. Credit is just the borrower has a history and reputation. So sometimes banks will talk to other creditors to see how they were as a borrower. So it's not always just that credit score. There's like personal credit score, and then there's also like business credit, which is a little bit different. Okay. And so to borrow from a bank, you typically need all 3 of these things in order to borrow, meaning you have to have good cash flow, you have to have good collateral, and you have to have good credit. And you guys probably know this as small business people or people interested in small business. Hawaii is actually a very conservative lending state. It's actually harder here to get loans and to get capital than it is on many areas of the mainland. And that's something that I think surprises people because we are, I don't know, we have a lot of minorities and we're a liberal state as far as politics go. So you think those kind of things would be less conservative, but it's actually pretty conservative. And so that's another reason we want to grow the CDFI industry to help combat that. And so These are additional factors in being bankable. Time in business. So banks are going to look at that. So when we'll talk about startups, I know people have been asking, and we'll talk about time in business. Personal credit score. Personal finances and orders. Banks, a lot of time, they can see the activity on your checking and savings account. They can see if you don't have any money in there, unless you're, borrowing from a different bank. But a lot of times they try to check, like, are you behind on lien payment or on payments on your house? They can see these things. And so if they can see things are in order, that does contribute to the loan process for a lot of banks, if they can find it out. A good relationship with the bank, meaning you've banked there for a long time, you've got maybe a small loan from them. And this last one, organized and up-to-date financial documents. I'm going to be covering that a lot more during this, but I just wanted to start pointing that out now. Organized and up-to-date financial documents is a big one. And we'll talk about this later. Yes, this recording will be shared. Thank you for asking. Okay, so now you're probably wondering, how is being bankable relevant to CDFIs? Well, because my main goal for all my clients is to be bankable after working with them. The whole point of a CDFI is we want to get people to be bankable. Banks, even though they're harder to get money from, they can typically provide bigger loans. And when your business is in that real growing phase, they can get money a lot to you faster a lot of times or in bigger amounts. And so I'm limited as a CDFI. I can help people get started in the financial stability process of their business, but I'm not going to be the guy that helps you build a $2 million warehouse on your property. That's a whole different thing. And so that's what I'm trying to help you, is to be bankable. So let's kind of go over this. So this is kind of funny. I just kind of made this, but these are my goals as a CDFI practitioner. That a Hawaiian business is CDFIable, which turns into Hawaiian business is bankable, which turns into Hawaiian business is financially stable, which turns into Hawaiian business thrives, and then Hawaiian wealth, education, and influence multiplies, which Hawaiian and Aina-focused economy grows, and Hawaiian people and their land flourish. This is my goal. Like, I know I'm just talking about, loans for small businesses, but this is my big picture, and this is my why for what I do and why I'm so passionate about lending to Native Hawaiian businesses. It's because I can see these things and how they all interconnect in the steps that our community needs to take in order to get where we want to be. And so we're going to look at this now. So I've talked about what being bankable, but now let's talk about what being CDFIable, quote unquote, means. How do CDFIs decide who is CDFIable? So that goes back with people's questions about what our parameters are for lending. There's 3 primary factors that we look at. 3 C's as one factor. 1 strong C can be enough. 2 solid C's are ideal. And we can talk a little bit about that if we need to. We also look at our mission. So our mission as a CDFI. The borrower fits our target community. For example, for me, Native Hawaiian. And the community itself, so the Native Hawaiian community for me, is the target community benefits from the borrower's success. And so you typically just need 2 of the above to borrow from a CDFI. Let's see if there's any questions there. No, okay. So 1 strong C can be enough, 2 solid C's are ideal. Let's talk about that a little bit. I'll give an example. Let's say there's a business. Let's use the startup example. Let's say there's a startup. They've only been in business for a year, but they have great cash flow, like really strong. They're bringing in a lot of money and they're growing quickly, and they need some money to expand their operation, maybe get a bigger office, bigger lease space, whatever it is. But they don't have good credit because they're a startup. Startups don't have a lot of credit history. And let's say the startup itself doesn't have a lot of capital. Maybe they have some machinery, but let's say they need 100 grand and their collateral is only worth 25 grand. So 1 strong C, if I see that they're really profitable and they are bringing in a lot of revenue, that can be enough in the decision-making process. It's not a guarantee, but it can be enough. I'm also going to be looking at, is is this person, is this borrower, this small business, is it a Native Hawaiian owned small business? And in the community, the Native Hawaiian community, does the target community benefit from the borrower's success? So for example, let's say this business is they do agriculture, they grow kalo, and they're new, but they're doing great. The owners are Native Hawaiian, and for the success of this loan or the success of this business means more healthy food for the local community and jobs served. Yeah, that's probably a loan that I'd want to do, even if they don't have great credit. What if we are just starting? This is a question someone just asked. What if we are just starting and haven't done much business yet? We are Native Hawaiian. Talk to me, talk to CDFI and see what we can do. Usually we try to do these, we look at all three of these things to see what options we have. To be honest, like startups are a little bit harder just because it's not, well, it's a startup, one, because it's risky, but two, there's just not a lot of history to go off of. And so you're just going to have to tell the details to the lender if you are a startup. I am a ghost in the credit world, never borrowed all cash. How am I viewed? I'm Native Hawaiian. Good question. Let me tell you actually a little tiny story. This is a current thing I'm working on right now. And I can't name names, and I don't even want to say the industry because people might even recognize it. I'm just going to say they grow apples. So right now I am working with a business that has grown apples for 12 years, long time. And during the pandemic, their revenue and their profit margins have been insane. They've been bringing in like 2.2 million a year. They're super healthy. Business is on lock. They have a lot of customers. They're expanding to the mainland. They're doing a lot of things. And they're trying to expand their operation of growing apples. And guess what? For the last 12 years, they've never borrowed a penny. They've never borrowed anything, even a little $10,000 loan, $20,000 loan, nothing. And right now, today, they need $800,000. And so I'm currently working with other CDFIs to try to make up that gap. They have 300,000 liquid, so we only need to make up 500 grand, but we need a couple CDFIs to reach that 500,000 amount. And what's annoying is my CDFI has talked to this business before, and we try to tell them like, hey, you guys should borrow a little bit of a small business loan just to have it on your records, to have it on your books, to build some credit history. And the owners were very old school and a little bit hard-headed, and they didn't want to do it, even though they could have used it. And so now they're faced with this problem, like, oh, all of a sudden we need 800 grand to expand our business, and it's the perfect opportunity, but it's going to be hard to get them financing, to be honest. I think we can do it. I'm really hoping we can, but they don't have the history. And so what I would say is, if you're a ghost in the credit world, get in the credit game, and not just the credit game, but get in the finance game. If you don't have a business credit card, get a business credit card. Don't be scared of debt. Credit is like a tool. Tools are very helpful, but if I give you a pocket knife, it's a little tool. You can still kill yourself with the pocket knife. You can kill yourself financially with a credit card, but if you just know basic safety, if you have basic common sense, you can use your pocket knife to do a lot of things. So that's the way I would look at credit. Don't be scared of it. Just take what you can at a time. If starting with the credit cards, where you need to start there. Then you could do a small business loan. Then you can do maybe a medium-sized business loan. And you just kind of work your way up, because when you're a ghost in the credit world, and then all of a sudden you have this best opportunity to make a lot of money, grow your business, but you've never borrowed and you need a lot of money, a lot of times you're going to be stuck. So I would try, for anyone here, I would try to combat that. If I'm in the mainland / military, can I still apply? From Dalen Adams. If your business is registered here in Hawaii, that's what we require. You have to be in state. But there's CDFIs everywhere. There's CDFIs in most states. And so you can look up in your own state if there's any CDFIs, and you can talk to them. Cool, I think that's all the questions for that right now. Does anyone have any more questions, maybe about the mission section or the community section? I'll just wait for just a second if anyone's thinking of any questions. Sorry, I hopped on late. What is a CDFI? A CDFI is a nonprofit that does loans. So we do, me specifically, I do small business loans for the Native Hawaiian community. It's just a nonprofit, basically. Okay. Building credit and understanding creditworthiness is vital, especially in our Native Hawaiian communities. I definitely agree with Kai. That is huge. And that's part of the reason why I don't just do small business loans. I also do one-on-one financial guidance with people to help them understand the big picture. Understanding these things is crucial if we want to grow our community's businesses. Okay. Sweet. I'm going to move on. If any more questions come up, we can talk about them later. And so let's go to the next one. So here's some secondary factors. So this is adding on to the question. Mind briefly going over what the 3 C's are. Yeah, so this recording or this session is being recorded. So I did go over it, but I'll just show you it real quick. I don't mind showing it. There you go. Cash flow, collateral, and credit. If you want to take a snapshot with your phone, or if you want to write it down real quick, it'll also be in the email with the slides later on. Okay. All right, so how else do CDFIs decide who is CDFiable? Oh, no worries, you're welcome. Secondary factors, years in business or time in business. It's not like you have to be a certain time in business to be CDFiable or bankable. It just helps, but if you're strong in other areas, it doesn't matter as much. Also depends on the who you're talking to as far as the organization, what their goals are. Okay, experience in similar business ventures. A lot of times when someone's a startup, like let's say someone's building va'a, they're building canoes, one-man canoes. Let's say they worked in the canoe industry for 15 years and now they're starting their own business. Yes, they're a startup, but I know as a lender, they're very experienced. They know what they're doing. This isn't like a canoe builder trying to start a truck painting thing that he's never done before, like a completely new venture. Experience in similar business venture helps. So make sure you tell your lender when you have conversations with them, like, yeah, I've done this for this many years. This is what I know, instead of just saying, I really believe in myself to learn what I'm doing. It's like, try to show the things you do know, show what you know. That's what I would say in that. Secondary factors are cosigner or a guarantor, someone who's willing to pay your loan if you can't. I know that's sort of fine, and like you probably don't want to ask your family, your friends, or whoever, but it does help if you can acquire that does make the loan approval a little bit easier for you, or a lot easier in some cases. Okay, this is a big one. I want you guys to look at this for a sec. Promptly replies to emails and phone calls, or AKA a good relationship with the lender. You know, what's really funny is I have people talk to me and they're like, hey, can you tell me about CDFIs? I send this whole thing, all these resources, and then they don't say anything for weeks. And then the next email is, cool, like, can I get like $20,000? Or how do I get $20,000? And it's just like, okay. And then when I call them to try to have a conversation, they don't show up to meetings. That isn't technically part of the lending process, but it kind of is. If the person's not reliable to communicate, how do I know they're reliable to borrow money from me? So something to consider there. And that's one thing I've talked with other CDFI professionals about, is the people who are prompt, email back, are thorough, respond to questions, and are on it. Those people, they're usually, what's it called, better borrowers, because they're just on things. So you want to show that, and you want to be that, not just show that, but be that. Okay, here's a big one: up to date and organized financial documents. So at first, this is a secondary factor, but eventually it becomes a requirement in the loan process. So I have businesses come talk to me, and I'll be like, cool, like, what's the steps of getting a loan? I'm like, well, let me know how much you're asking for, and then send me your business financials so I know what your business is about. I can see how you're doing. I'm like, do you have your tax returns from last year? Do you have a cash flow statement, balance sheet, profit and loss? And they're like, yeah, like I'll have to figure those out. And then next thing I know, it takes them a month to try to find those things, or it takes them a month to try to create those documents for me. And that's not necessarily a bad sign. I know business owners get busy, but it means that they're not familiar with their financials, which as a lender, that's mostly what I'm looking at. That's the only way I can learn about your business. I wasn't there when you started it. I wasn't there when you made your first sale. I wasn't there when you made your first big deal with someone that's a reseller. So for me to see all the things and see the performance of the business, I need your financials, and they have to be up to date for me to make a loan decision. If you can't tell me how your business did last year, but you can only tell me how it did 3 years ago, it's helpful, but it's not helpful enough. So as small business owners, please try to keep up to date on those things and keep it organized. The people that can send me within the day their financials, they always have really good odds because I know, oh, they're on it. They know what's up with their business. And I've also lent money to people that didn't have their financials in order, and I actually helped them make it. I had one loan that I did for a guy who does construction. He did construction and he wasn't the best with financial documents. And so after he would get home from his work, I would stay up with him from about 7 to 12 at night, creating his profit and loss and creating his balance sheet and going through his business bank account to see what his cash flow was. And CDFIs are able to do that because we care. And we see people that come from communities or come from backgrounds, they don't always have this knowledge. They couldn't afford to go to college. They can't afford to sometimes get this help. And so we see that, and it's not an automatic no. So I wouldn't disqualify yourself before you talk to a lender. Just talk to them. We'll let you know what we need from you, and we can help too. So I'm going to look at the chat real quick. Okay, we did that. Going to slides and recordings. Yep. Tell your story. Yes. Okay, Tina, how do I request an initial financial guidance appointment with you on Maui? I'm a native Hawaiian wahine farmer, small business owner, and health food producer. You can answer this later. Mahalo. I have my contact information at the end of the slides with my email. Basically, we'll just talk, and that goes for anyone that's listening. If you want to have a conversation, send me an email, and we can have a phone call. We can have a Zoom, whatever is comfortable or convenient for you. I'm available Monday through Friday, so just let me know, and I can pretty much meet anytime. And if your business is crazy and we need to meet at 9 p.m., just let me know. I'll try to make it work. That's why I'm here for you guys. I'm here for our community. Oh, and then I put a little professional business person icon, because really what I'm trying to say is just learn what being professional means. Being professional isn't having a certain haircut, isn't having certain clothes. Being professional is having good foresight about your business and how to communicate those things. Okay. All right. So let's see, where are we at time-wise? 12:10. Oh, I think I've gone kind of long. Okay, this is actually the last bit, so we're going to go over this. Sorry, I won't try to rush or anything. We'll try to get through it. Okay, part 3. The difference between investing in your business and investing in your revenue source. This is really just going to be advice for a small business owner. That's what this is going to be. Okay, the car analogy. I'll be quick since I've gone a good amount of time. Imagine you're going on a road trip, and imagine the driver is obsessed with making sure their gas tank is full. They're always like, where's the next gas station? Is my gas tank full? Let's get gas in the tank. That's all they focus about. And let's say it's a really long road trip and they completely ignore their tires. They could ignore their fluids. They ignore their oil. They ignore other things that help maintain the car. But they're like, well, you can't go anywhere without gas. Gas is the most important thing. And I guess, yeah, maybe in a sense you can argue that, but if your car breaks down, it doesn't matter if you have a full tank of gas. You're not going anywhere. And the reason why I use that car analogy is because small businesses, when you invest something, you're putting something in with the potential to get more out later. And investing is not just money, it's also time and energy. So to relate that back to the small business owner, I know some small business owners that come to me and they're always investing all their time into their product or into their service. If it's a clothing company, they spend all their time designing, looking at trends, looking at this. Meanwhile, they don't know anything about their financials of their business. They don't know how they did last month. They don't know what their profit margins are off the top of their head. They're just always focusing on these little things. They also don't know if their taxes are filed. They forgot to file them. They're behind on lease payments, or they forgot to pay them on time. They haven't paid their loans on time. They're behind on that. And things fall through the cracks because they're always obsessed with just the revenue source, which I get it. You know, you can't make money if you don't make money, right? But your business is broader than just your revenue source. So look at this little diagram. So put this, and by this I mean time and energy, that green box. Put this time, energy, and money into understanding your business, and you can put it into revenue source and development, meaning product development, service development, all of that. And this is what you get out of it. If you put time and energy into understanding the business, you get this, knowing your strengths and your weaknesses as a business, and you increase your ability to manage and maintain your business. While if you only put your time and energy and money into revenue source and development, all you get is increased revenue stream. It doesn't help all the other things about your business. In accounting terms or in financial terms, we would say, focus on your bottom line, not just your top line, right? Your revenue is up here. The way your business actually functions and what you come away with is at the bottom. And so knowing your strengths and your weaknesses and increased ability to manage and maintain, that's greater than or equal value to increase revenue stream. So I think we can all think of businesses that, you know, they're like a hole in the wall. They're a place, it's like, maybe it's a restaurant. It's ugly. They haven't even bought new chairs. They haven't had any new items on their menu. They're just really consistent at doing what they do. They don't need to invest time and energy into their revenue stream or new products, new services. They have their business on lock. Like I know a business like that here on Big Island that's like, it's been the same little hole in the wall sushi place, but they have tons of business. And I know the business owners, and they're actually pretty wealthy, but without, you know, they're just good at the business side of things, if that makes sense. So that's just a little advice that I want to give to the small business owners is make that time to look at the other things too. Don't just focus on, you know, having the best shirts on your website, because at the end of the day, you might be stuck with just a bunch of really nice shirts in a business that's dwindling and not very healthy. Okay. So what are some ways to invest time, energy, and money into understanding your business? So these are just some of my suggestions. So how do you actually do this? How do you actually invest into understanding your business? Keep up to date and organized financial documents. It always comes back. These documents are going to tell you everything you want to know, and that's what you're going to base your decisions off of. So if you have trouble doing this, and this is important, guys, this is what I would really want you guys to walk away with. If you have trouble doing this yourself, hire a CPA or go to a small business resource center like the SBDC, or even why we're here right now, the YWCA. There's tons of small business resource centers. So go to them, talk to them, and they can do the heavy lifting for you and get you on the right track. So you're not always at someone else's mercy to explain to you how your business is. If you can get to that point and learn the basics of finance, you're going to become very successful in that field, and it's going to put you on a really good path. Okay, other suggestions. Let's do, here we go. Review your financial documents monthly and measure performance. Make notes of the risks specific to your business and make plans to minimize them. Make plans. I've had people send me in financial documents or business plans, and they didn't realize that if their vendor, let's say they buy milk from some certain person or something like really specific, if that person goes under, they have no business. And I've known people that their business fails because someone else's business failed. So you got to know those risks and you got to plan for them so you can minimize those risks. Keep tabs on the competition, not just to like be competitive, but just to kind of know like, what are other people doing? What are they being successful with? We're not trying to, you know, steal the momentum or steal the business from someone else. We're just trying to see like, how are other people being successful and how can I implement that into my business? Visit a small business resource center for consultations and attend business trainings. So everyone that's here right now, you guys are attending a business training. So you should be happy about that. You're doing the right things and you're getting on the right track. This is exactly what we want happening for you guys. And girls, mostly girls in this meeting, I think. Okay, keep an organized list of all deadlines, due dates, and obligations. And this one's important because like debt payments, taxes, accounts payable, business licensing, leases, et cetera, just keep a list. I know it can be overwhelming, but you should know like, what are your obligations? Like, what are the things that are gonna put you or hinder you if you forget about them? And I see that with small business owners, they get so wrapped up in their business, which is understandable. Like, oh, I forgot to pay this. I forgot to do this. I forgot to apply for that grant. I forgot to attend that meeting. I forgot to do this. Just write them down. So try to organize them. Keep a calendar if you can. Write down the things that you need to do and make sure that they're getting done. Cool. Part 4, how to up your chances for a loan and tell the lender what they want to hear. This is probably why a lot of you guys came to this training right here. And this is what I got to say. The truth is, we already covered that. Just apply what we learned today. All these things, if you can become familiar with these, with this advice and with this guidance and this financial education, that's what lenders want to hear. And to get a little bit more specific, what ways do you think you can up your chances for a loan? And what I put, get to know your local CDFIs. So get to know me, get to know, you can just search CDFIs, Hawaii, and a list of us will come up. We can help you. Personally evaluate the 3 C's of your own business. That's a big one. Start with CDFiable, aim for bankable. Being CDFiable is way, not easier, but well, yeah, easier. It's easier than being bankable. So I think that's a good one. Fill up your gas and maintain your car. Do both. You can do it. Just make the time. Invest in understanding your business. Keep up to date and organized financial documents. I know you guys are probably sick of that one, but it really is that important. Cool. So yeah, I want to open it up for questions. You can ask them in the chat. You can also just email me if it's like specific to your business. But yeah, any general questions that people have, I'll wait here for a second, but I'm pretty much done with my presentation. So thank you guys so much for your time. How do I set up an appointment with you? Just send me an email. Send me an email and you can tell me like, hey, I saw you in the training. Email's at the bottom of the slide. I'll put it in the chat too for people that the slide isn't easily accessible.
Any last questions? Couple here. Should startups look for loans versus grants?
Should startups look for loans versus grants? Whatever you can get is what I would do. But to be honest, grants are harder than loans. I mean, depending. I mean, obviously there's all kinds of grants that I don't even know about. But typically, grants take a lot more effort from my experience. What else? Can you briefly explain what a working capital loan is? Working capital is just a loan to make sure you have money to use for business operations. So for example, let's say you're a dentist, I don't know, and you bill people when they come and get treated, but then the insurance is where your actual income comes from. So let's say you're waiting to get paid, but you have to use some money to do something. A working capital loan fills that gap because it's like, oh, I get paid in 2 months, but I need something right now. It could be other things too, but that's kind of just my quick end of our thing definition. Maybe this is asked, apologies if it had been asked already. Is there a cap on the loan amounts? That was asked, but it's a good question. No, there's not a cap. Lenders, we just like to see if the amount makes sense. Does the amount make sense? Because I have people come to me like, yeah, if I had 50 grand, I could do so much with that. I'm like, okay, what could you do with it? You're like, I don't know, but I know there's something there. I know I could at least use 30 grand and maybe just have 20 grand for a cushion. I'm like, well, if it was your own money, that's a good plan. But if it's someone else's money, they want to know what your plans are. So there's not a cap per se, but if you need $5 million, I'm not your guy to do that. I could put you in contact with people that have that kind of money, but I'm going to be helping more the growing business, the small business, on like, as far as small goes, like the smaller end of small business. I'm helping people get started, but I can work with other CDFIs to reach an amount that's bigger than what I can do by myself. So just talk to me about it and we can see what's available. Our company is trying to manage cash flow and having the ability to pay employees until we are paid is a big limitation. Right, working capital loan, that's exactly what that's for. Mahalo, great info, I see, thank you. You are such a bunch of fresh air in this whole process of starting up a business. Oh, thanks guys. I look forward to working with you. Yeah, me too. Really, my biggest problem, this might be surprising, but it's harder than you think getting loans to people, because people just don't know about CDFIs, and I don't have the budget to put an ad on Hawaii News Now or anything. And so that's part of the reason why I like to do these conferences, so I can meet people, get our organization out there and start networking, really. Can loans be used to pay off credit card? Used to pay off credit card, used to pay for supplies and equipment for your business. Doing credit cards the worst to use to start your business. So if it's a personal credit card, so debt consolidation is usually in the realm of consumer lending. CNHA does this. If you're looking for something on a personal level, go to CNHA, they can help you. There's other places too, but that's just another CDFI I know that does. What's another word? I can do debt consolidation for a business. So if you have a business credit card and you want a lower interest rate, that's a very straightforward loan. Come talk to me about that. That's very doable. Maybe an article called Viola. Yeah, actually, I've been looking into that option. Is a USDA loan program harder to attempt than a CD5 as a native Hawaiian? As a farmer, I've been in contact with them. Yes, Peter helped me too. Rest in peace. Yes, Peter Hanohano was my predecessor. And so that's cool that you guys know him, because he was a great guy. He really did some amazing things for the community. As far as USDA goes, it really just depends. Typically, I will say in general, I would bet that a CDFI is easier than a USDA loan because it's a little bit more government heavy. But again, I've worked with people on the USDA. In fact, there's someone on my board who works for the USDA that does his own loan program over there. So it's really just talking to people and seeing what they say. Does it make sense to consolidate an OHA Hua Kanu loan with an additional capital request to capitalize a new venture in Hilo? Additional capital requests. Yeah, it does. And that's going to depend on your business, but that's when you look at the financials and you look at interest rates and you look at terms and you look at all those numbers parts of it and we see if it makes sense. So yeah, I totally think it could. Mahalo. Cool. Well, sweet. If there's any other questions, just send them to my email. And I'm looking forward to working with you. And thank you so much for having me today.
Thank you, Louis. I really appreciate you joining us and providing all that great information. And one of the things, biggest takeaways is get your financials in order. And that's what we're here for at the Enterprising Women of Color Business Center, as well as Wayne Wong here is on the call with Maui SBDC. They can do a great job helping you as well, or going directly to Louis with your questions. We're all about, helping your businesses grow and helping you with that financial foundation. So I appreciate you all being here. As I said, we will send around the recording. If you have any other questions, you can email us. You'll see the email with other links to resources as well. And we are doing other webinars on access to capital. So there's a wealth of information we'll be putting out for you. And you'll see that, and hopefully you'll register and join us again. So thank you so much. Have a great weekend. Aloha.
Thank you.
Mahalo.